So why does the US want to build a national wealth reserve, better known as a sovereign wealth fund? But seriously, this is actually more interesting than it sounds, so just bear with me on this. Now, in case you missed it, in Trump's latest but also bold move, what he's done is officially signed an executive order to create the country's very first sovereign wealth fund. Now, you might have also heard that he hinted it could be used to buy TikTok. Now, whether you agree with his ideas or not, this is just a really interesting story that I think we should all continue to follow. So today I want to properly break down for you in simple terms about what a sovereign wealth fund is, explain how these funds actually work, share some interesting examples on how other countries do it, and why Trump wants one for the US, even though it has a bit of a problem. Plus, we'll also look at what could go wrong if this doesn't work. So stick with me because by the end of it, I think you'll have a pretty good grasp on what this is all about. So what exactly is a sovereign wealth fund, or SWF for short, and why are people talking about it so much? Okay, so the best way to think about this is to imagine you or me as the country itself. We all have a bank, right? So think of this as your piggy bank where every dollar from the paycheck you earn from your job goes into this account. Now, some of those dollars you've earned will be used to pay bills like electricity, paying for the groceries, and a whole bunch of other stuff. You'll also have some money dedicated to savings where it will also just get stored in your account for a rainy day. But then the other portion of that money will be most probably be used to invest in stocks and bonds and maybe even real estate. These are your investments. The reason you do this is because, well, you kind of expect that you'll get more dollars than what you actually put in over time. This is where the value of the wealth fund comes in. Now, replace your piggy bank with the government's piggy bank. This is the sovereign wealth fund. It's basically a state-owned investment fund. And this is how it works. That wealth fund will get dollars coming in from revenues generated by the government-owned assets. Maybe it could be from natural resources it sells to other countries, like oil or natural gas, for example. But instead of just keeping that cash in a low-interest bank account, the government invests it in stocks, bonds, real estate, just like you and me, or even private companies and funds like private equity and venture capital. So over time, as that money grows, it can then be used to fund important infrastructure projects in the country or help stabilize the economy when things get tough. So that's how it works in general. But how do other countries actually do it? Well, here's just a few well-known countries you've heard of, but you probably have never heard of their giant investment funds. So for example, Norway has something called the Government Pension Fund, often called the Oil Fund. It's one of the largest in the world, worth over $1.7 trillion, and it invests that money it gets from all of its oil revenues globally, usually from licenses it gives out for exploration and company taxes. Now, according to the latest stats, that fund has invested in over 8,500 companies worldwide across 71 countries. China also have their own sovereign fund, better known as the China Investment Corporation, or CIC. Well, that's currently worth $1.3 trillion, which is kind of surprising actually, because you would think China, as one of the largest economies in the world, would have the largest fund size. In fact, Norway's is actually bigger. But regardless of all of this, the CIC has made some really big investments into Alibaba and Didi to spark the tech sector in China. And not only that, it has contributed money into other funds like the Silk Road Fund. Now, if you don't know what that is, the Silk Road Fund is the primary goal of building out these massive infrastructure projects between Asia and Europe. The whole mission of this is to increase China's presence into Europe and beyond. And then there are the funds from the Middle East, like Saudi Arabia's Public Investment Fund worth $930 billion, which is both used to secure national wealth and to boost their global influence. And now again, these funds are using the revenues it's collecting from its state-owned assets like natural resources to continue improving their nation and its citizens. But let's now talk about the United States. The US is in a very different boat. Just like the other countries we spoke about, the US wants to create a tool that can invest the nation's own assets to help fund big projects, which makes complete sense, right? So the goal of the fund would be to, number one, pull together the US government's existing assets, which according to some estimates are worth trillions of dollars. This would then be used to build a fund out that invests in things like highways, airports, and even going into emerging tech like AI. But then this is where it gets really interesting. The US is very different from countries like Norway or Saudi Arabia. Those countries usually have extra money from things like oil exports, but the US has been running budget deficits for a long time. So basically the country is in debt to the amount of $36 trillion, and it's growing super fast. By the way, side note, take a look at this crazy website showing the amount of US debt being tracked in real time. I'll put the link in the description, but it's just crazy to see the numbers just ticking up. So all of this debt, it basically raises big questions about where the money would actually come from. So yes, the idea is controversial. Supporters say it could be a way to generate new revenue and compete on the global stage, especially against rivals like China. But critics worry it might lead to government mismanagement, increased taxes, or political interference in investment decisions. This is exactly the reason why the Department of Government Efficiency, aka DOGE, was created to hopefully move the US debt into a US surplus. Trump even mentioned using it for a potential vehicle to acquire TikTok, for example, which sounds wild, but it underscores his desire to use the fund as a tool to boost US economic power. In fact, what you may not realize is that various US states actually have their own state-specific wealth funds. The biggest ones include the Alaska Permanent Fund worth $74 billion, the Texas Permanent School Fund worth $55 billion, the New Mexico State Investment Council Fund worth around $31 billion, and so many others. So it could very well be that the US government might just be heading up these state funds for some advice on how to do it right. But in general, the whole idea of building a sovereign wealth fund is really noble. Here's why. Number one, long-term growth. Sovereign wealth funds invest for the long haul, which means that they can ride out economic ups and downs and grow wealth over time. It's also an economic stabilizer. They can help smooth out the effects of economic shocks, acting as a buffer during recessions. And it allows for strategic investments. By putting money into key sectors like tech or infrastructure, a sovereign wealth fund can drive national priorities and boost competitiveness. But there are some key challenges. So the first one is funding issues. Unlike Norway, the US doesn't have a massive surplus from oil or trade. The US runs deficits, so critics ask, where will the money come from? The other one is management risks. Poor oversight or political meddling could lead to bad investment choices, and government-run funds in some countries have faced corruption or inefficiencies. So for example, Norway has imposed bans on investments into certain companies which doesn't align with their core values. This could be around human rights abuse, production of tobacco, and even environmental damage. And finally, political interference. If decisions are driven by political goals rather than sound financial analysis, the fund might not perform well. So while a sovereign wealth fund can be a powerful tool, it also comes with a lot of potential pitfalls that need careful planning and independent oversight. So what can we learn from all of this? If implemented well, a US sovereign wealth fund could help finance major national projects and drive long-term economic growth. But if that's mismanaged or driven by politics rather than solid investment principles, it could end up being a costly mistake. Anyway, I hope this gives you a clearer picture of what sovereign wealth funds are all about and why Trump's proposal is stirring up so much debate. And if you found this video helpful, please give it a thumbs up, leave a comment with your thoughts, and subscribe for more easy to understand explanations of complex topics. Thanks for watching, and I'll see you in the next video.